There's a period of, I think, great uncertainty and great risk. And so I think there are three words: diversification, um, liquidity, and then differentiation.
Ray Dalio runs the world's largest hedge fund, Bridgewater Associates. The belief and narrative has certainly been in 2020 there's no such thing as a free lunch, but is this actually correct? Are we coming towards the end of what Ray Dalio terms the debt cycle? Should we avoid holding cash? What are the best assets to actually invest in? I discuss Ray Dalio's thoughts and recent comments in this video.
In my opinion, don't own bonds and don't own cash because they're producing a lot of debt and producing a lot of money to fund it. And so that's changing the nature of capital flows. It's also changing how those flows go to China in terms of the comparison of that market, particularly as it opens up. So I think it's behaving sensibly, but don't use old multiples as reflections of the limitations of what's expensive.
So you can see that Ray Dalio very, very clear on his opinion. What he said repeatedly is we need to pay attention to the value of debt and money relative to the value of assets and actually other currencies.
And I wanted to study the rises and declines of reserve currency empires. So I needed to go back far enough that I would have a few. So I had to go back 500 years so I could see the rise and decline of the Dutch Empire and its reserve currency, the rise and decline of the British Empire and its reserve currency, the rise and beginning of decline for the United States and its reserve currency.
So Ray Dalio has been doing some interesting research recently with regards to rise and fall of great empires. And you can see here in this diagram what he's kind of referring to. You can look at the Netherlands there, the orange line back in the 1600s, or the UK back in the 1800s, or China in only the last 20 to 30 years. So I think the point he's making is a good one, but what is the time frame we're talking about here? We could be talking about decades to see any real change in terms of worldwide superpowers. There's actually a great quote by Neil Ferguson from Bloomberg which says, "History also teaches us debt and power are connected. A great power or empire that accumulates too high a mountain of debt and fails to keep growth ahead of debt service is destined to decline." But is this actually true? Ray Dalio actually talks about monetary policy 3. Let's hear what he says on that.
The long-term debt and monetary cycle, which I mean the creating a lot of debt, monetizing it, and the implications of that, which reverberate through the system in terms of all the markets and everything. And so we're in a new era, okay, of monetary policy 3, as I call it. Monetary policy 3 will mean that the free market will play a much less role in determining those capital market flows, that the government, as we come into the future, will be thinking, how do I get that money to those who need it the most? So it'll be a highly political decision, much more political than it was in the past, and that the central bank then will monetize those political decisions. So monetary policy 3 means there's that type of cooperation.
But is there really such a thing as a free lunch? Again, I think most investors would say no, but given how 2020 is gone, is there an argument that you can actually get away with it? Well, Jason Furman and Lawrence Summers, economists, argue that public borrowing today offers something that is very rare, a free lunch. And the reason for that is the low interest rates. So how does that actually work? Well, we already know there isn't actually any correlation between debt to GDP ratio and long-term interest rates. Same way, size of central bank balance sheets has no correlation with inflation, as we've definitely seen this year. But the key thing here to be aware of is the actual debt service cost. Governments refinance debt. And it's the debt interest, only the debt interest, that must be comfortably payable from a country's current income. Now, we've seen problems in the EU, for example, with Greece and Italy, but the issue there was the debt service cost and the fact that as they accumulated more debt, their interest rate on that debt was actually increasing. And it's actually time that's a critical factor. You can see here in this graph, if we set debt to GDP ratio, as an example, anywhere between 110% to 150%, you can see all other things being equal in the first few years, there's not a massive impact on debt to GDP long term. However, the problems come many years down the road. So what does Ray Dalio actually think about cash right now?
Well, I think first, the most important thing is to realize first, cash is a risky asset. I think so many people think if I go to cash, I'm going to be safe because it's much less volatile. But please realize in this environment of producing a lot more cash, the real returns go down. It's a seductive risky asset because, let's say, relative to inflation, you might get taxed 2% a year. And as you're taxed 2% a year, that's a huge amount of money over time, but it's a subtle tax. So first, watch that.
So I'm inclined to agree with that in terms of potential returns, especially when we consider that savings accounts won't offer much in terms of interest payments. However, what about the risk element of cash? He's talking about the cash risk there, but what about the risk when it comes to investing in other assets? An easy example is the stock market, where traditional indicators tell us the stock market is way overvalued. However, we're slowly beginning to realize that those traditional indicators just don't matter anymore.
It's smart for a company to have a technology that's going to replace people and jobs, but you get to a smaller and smaller percentage of the population that makes that technology and benefits it, and it produces that wider wealth gap.
I actually agree with him on this, and I think this has been a trend change for many years now. Now, what are governments going to do about it? What can they do? Companies will always look for the most efficient way to do things, and they will actually cut costs wherever possible. I have no idea what the solution to that is, to be honest. What do you think is going to happen? Please comment below. Let me know your thoughts. Now, let's talk about what Dalio says with regards to Bitcoin.
Theoretically, it's good, but the three basic things are a currency has to be an effective medium of exchange, storehold of wealth, and the governments want to control it. So I today can't take my Bitcoin yet and go buy things easily with it. And as a storehold of wealth, it's so volatile that its volatility based on speculation is so much greater that it's not an effective storehold of wealth, and which is also one of the reasons it's a problem to be a transaction vehicle, because if a vendor says I'm going to get paid in Bitcoin and they don't know what that means in terms of their other liabilities, that's a problem. And then thirdly, governments won't, and if it becomes material, governments won't allow it. I mean, they'll outlaw it, and they'll use whatever teeth they have to enforce that. They would say, okay, you can't transact the Bitcoin, you can't have a Bitcoin. So then you have to sort of be almost like, is it a felony? And I'm going to have to be a felon in order to transact.
And this is a quote from earlier this year. 2 purposes of money, a medium of exchange and a storehold of wealth. And Bitcoin is not effective in either of those cases now. But that's in sharp contrast to what he said recently. Another billionaire Wall Street legend has changed his tune on Bitcoin. After warning last month Bitcoin could be outlawed, he said recently Bitcoin has established itself as a gold-like asset alternative, but it's very important for us not to take some of these words out of context. You can see here with this precise quote, he was talking more about diversification than anything else. So what do you think? Let me know in the comment section below. Is Ray Dalio correct about us coming towards the end of a debt cycle? Do you think larger investors are taking Bitcoin seriously now? And will governments ever be able to deal with the debt mountain? Thanks for listening, and I'll see you all in the next one.